Hi, everyone. Thanks for making it. It is February 11th, 2026, and this is the meeting of the Bloomington Urban Enterprise Association. We do have quorum, and yeah, go for it, Heather.
Hi, welcome everyone. Thanks for being here today. We will start with a roll call. Kate, you want to kick us off with roll call, please?
Kate Rosenbarger.
Felisa.
Hi, Felisa Spinelli.
Michael Hoper.
Brad Whistler.
Heather Robinson, BUEA.
Tegan Garner.
A little louder.
Tegan Garner.
And then say staff.
Staff.
Yep, there you go.
Sorry.
No, it's okay.
Yeah,
We didn't
no,
get the
it's your
clip
first
notes
time.
on that
It's your
one.
first time.
Yeah.
D. Del Rosa, staff,
And Jane Cooper Smith, BUEA.
and then we have
Emma Yoder, CDFI Friendly Bloomington.
and Brad.
Brad.
I'm Brad McConnell from Allied Community Business.
Great.
Do you have quorum if I step out for a call? I'm sorry, there's an urgent item. But if not, that's okay. I'll just call them later, sorry.
Okay,
There's
thanks.
an
Sorry.
emergency, sorry.
Sorry. Once we get through roll call, or once we get through the minutes, then yeah.
Okay.
Approval of minutes.
All right. Let's December minutes. Did anyone have any questions, comments, corrections to the minutes? Bless you.
I looked through it, I didn't see any problems.
Okay. If I'm hearing nothing, I will ask for an approval, and we will need to do a roll call on that as well, since we have folks online. So again, Kate, do you want to lead us off?
Kate Rosenbarger, yes.
Felisa Spinelli, yes.
Michael Hoper, yes.
Brad Whistler abstain. I wasn't here for that meeting, so I can't tell you.
You were, it was December. It
Oh,
was
this
the
was December.
budget
It's not the
approval.
Yes.
Yeah.
Yes, yes, yes.
Heather
Yes.
Robinson.
And yes.
Okay. Heather Robinson, yes.
Jane Cooper Smith, yes.
All right. Minutes.
Oh,
Approved.
no. Wait. Oh, is it really okay? Well,
Yeah, I
you can't
mean-
stay convened. So you can't talk about business if you don't have a quorum. So, yeah,
right.
no, it's okay.
Okay.
Thank you for trying to accommodate.
All right. Sorry, we've got a lot of things going on today. Director's report. Some general updates. Working on the loan conversion program right now. We do have 6 applicants. I'm slowly working through redacting information to get it to our little advisory committee. So still working on that. We do have a BUEA board calendar. I have worked that out, and it is in the online packet. I'm sorry I did not get copies of it to you. But my general question is whether you would like a living calendar, and you don't have to decide now, or just like a static spreadsheet that I can get to all of you. So just think about what works best for you all, and I'll make that happen. And I can accommodate each of you individually, however you'd like to do that. So in progress, we have some changes to the consultant RFQ. That is on the calendar today for me to present, or at least share. We've changed that up a little bit because I would like to introduce Tegan Gardner. She is my O'Neill Fellow for the rest of this year next. Highly capable and has been absolutely wonderful in helping me getting board documents organized, just helping me get myself together. So it looks like we don't actually need necessarily the position that we agreed upon in the budget. However, I will probably need assistance with the marketing aspect that we've talked about many times. So because it is in the budget, I will be asking the board to approve a change to that budget line for a marketing assistant, since we do have the administrative assistant covered.
And the hope is that you'll focus on marketing, since you've determined you don't have an operations administrative need.
Yes.
And that will grow grant participation and will grow hopefully revenue through.
Absolutely. Yeah, I think that having someone who can help me constantly get the word out about these grants and scholarships, because spending the money is what this is kind of about, and B, getting people to see what we do so that they will be more willing to participate as far as our ESID program would be absolutely lovely. What else is in progress? We're working on ESID reminders and invoices. Those are gonna, hopefully we'll be sending them at the beginning of March. We'll say second week of March. Those are a little bit harder to get together sometimes. But what we do with that, if you're not familiar, actually, I'll just say it because you might not know, Tegan. How we get our revenue is through the Enterprise Zone Investment Deduction Program. Certain businesses participate within the zone, and it works sort of like a tax abatement where they get an 80% discount and we get the other 20% to make like grants and scholarships, and that's how we're funded. We send out communications and correspondence to remind people that this is coming up. It's very much courtesy to do that, but we get response from it, and we like to get that revenue so we can continue to do the work that we do. Additionally, I have mentioned many times that we have a very tight quorum. Now that Mary's term is up and Phil has resigned, and we've also always had a resident seat open. Please, if you have any recommendations, please have people apply. They do need to be residents within the zone. So we are looking, as far as the council appointments, they need to be of two different political parties. It doesn't matter what the political parties are, but each resident has to be from a different political party. Then we also have, I'm also working on a downtown action plan. It's in draft phase. It's with the consultant right now. This is a project to revitalize the downtown through programming and not necessarily infrastructure. It's a lot of business involvement, community involvement. So we're working on a draft of this with Downtown Bloomington, Inc. The consultant that we are working with is Downtown Strategies, which is a part of Retail Strategies, who helped us implement a small business technical assistance program. It's all online. So people and residents have been utilizing that, and it's been really great. And I've taken the course, and it's fantastic. So if you're interested, I am happy to talk to you about it. We have that service for free to all residents of the city of Bloomington until August of 2026. So they've helped us with this action plan. They do this in several different cities. They've done this with all sorts of college towns. And so it's very robust. There are some things that are very, very bite-sized for the community. There are things that are much larger that are policy changes that could really help revitalize the downtown. So once that final version is available and presented by DBI, I would like to give a presentation to the BUEA because I think that this organization could do a lot of really great work within that plan. So other than that, unfortunately, we will not have a financial report today. There were some transactions that need to be finalized, and Cheryl is under the weather, so we will not be having that. We were going to push that to March. Does anyone have any questions about anything before I ask the board once again to vote on changing the budget?
Yeah, just to back up a little bit. I know we did a roll call on minutes, but didn't you need an approval before?
Oh, sorry.
Oh, do we do that?
Sorry. Did I not get a
I
first?
motion to approve.
Okay, I
Thank
need
you.
Michael Over.
Sorry, and then we need a second.
Second.
Okay, great. We had the roll call.
Okay,
So
we're good.
Okay.
may the minutes reflect the first and the second on that. Sorry. Amount of practice. We didn't meet last
Yeah.
month. So.
Yeah, we are a little rusty coming
yeah.
back.
I did have a question on, well, actually, let me back up as well. one quick thing, I know Mary Morgan, her term ended, and so she's decided not to continue on the BUEA board, and she's not with us today. And since we didn't get to meet last month, which would have been her last meeting, I just want for the minutes to acknowledge Mary and the work that she's done on the committee, and just to thank her, publicly for her, her time and all of the work that she has done for the BUEA. And we wish her well and hope to see her again and
absolutely.
other capacities. So just a thanks to Mary, noted for the minutes.
That does actually bring up one more item that I forgot to add. Mary was the secretary of this board. We will need to elect a new secretary. However, I would like to wait until we have the additional board members before we do that. I think that we can probably go at least one meeting without that happening.
Okay.
But regardless, by April, we will have to probably make a decision on that. So.
Okay, that seems good.
Yeah.
And then I do have a question. I know you're looking for an approval to change the budget.
Mhm.
So the budget for the admin originally was $25,000.
Mhm.
Am I remembering that correctly? Okay. And I see you have the draft in here for the what you're seeking for either a marketing assistant or potentially contracted services. Is that fair to say that it could
that's
be?
within the realm of reason for sure.
Okay. And so I wonder, does it make sense for us to approve the change today, which, I mean, the money essentially is already allocated, through the budget, because you don't know exactly what you might end up, like, as you cast the net, so to speak.
For
It
sure.
may be, a person who does marketing out of their home. It might be, a local firm that does some work. And so depending on what that result is, it may change the need. So I don't know. I'm not trying to hamstring you. I'm just asking the question.
No.
So if you come up with a firm who can do this work for you, but they say, oh, hey, this is going to be $35,000 to do that, but we can do all of this and more potentially. Do we want to then have to come back to maybe make another adjustment? That's my only thoughts.
I see what you're saying.
Yeah.
So would it be better to have Dee move through the RFP process and
And
then
then come back
to
once
affirm?
once she's identified, because I understand this isn't going to be a city employee, correct? It's
Correct.
So that to me then makes it a little bit uncertain as to what you might,
For sure.
find in the resources you need. So
Yeah.
really, I want to just offer the flexibility to seek out what's needed versus.
I'm happy to go through the RFP process and then come back to the board with what may be the max goal.
Okay.
I know that within the RFP, sometimes I have to state what my cap is or something to that effect. Or is that old procurement process? I'm not.
We'll talk to
Yeah,
the controller's office about what has to be indicated.
I've only done a
And
couple of them,
If you
so.
have to indicate a number, we'll indicate the budget number that was approved.
Okay, for sure.
Okay.
All right. Yeah.
Just offering that, is that helpful? I guess that's.
Yeah, I actually hadn't really thought of it that way, but yes, I think that would probably be helpful instead of having to do two motions.
Okay.
Instead of changing it and then coming back for more money.
If the board
that's-
is okay with everyone
Yeah,
agrees with
waiting on
that.
that.
Okay.
Okay.
All right.
Great.
Good deal. Thanks. All right.
All right, well, then, since we've gotten through that and we don't have financials, then I guess Allies for Community Business and CDFI can take it away.
All right.
Hello, everybody. My name is Emma Yoder, if we haven't met. I work at CDFI Friendly Bloomington. And yeah, if you don't know anything about us or you just need a refresher, we are a nonprofit here in Bloomington that connects small businesses, affordable housing developers, and childcare providers with CDFIs, which are community development financial institutions, and they specialize in flexible, affordable loans for underserved communities. So we're trying to bring those CDFIs here, and we've partnered with Brad at Allies for Community Business, and he is the CEO there. And he's going to give a short presentation on what they do and how we're partnering with them with our loan. Thank you.
Thank you. And thank you to all of you for the time. What I propose to do is spend somewhere between 5 and 7 minutes walking through what we do and how we do it, and then stop. And then to the extent that you'd like to have a discussion about any of those points, I'd be delighted to do so, but obviously I'll be respectful of your time since you've been so graceful in allowing me to participate at all. So I'll begin by sharing a screen, which I will ask if you can
Yes.
give this to, please. Thank you. All right, here we go. Okay, I trust you can see that.
Yes.
So we'll start, as always, with who A4CB is and what we do. Our vision is that entrepreneurs from any background at all, can start to grow a business that create true wealth for their families and their communities. And importantly, our mission here is to provide all three of the capital and the coaching and the connections that entrepreneurs need to grow great businesses, create jobs and wealth in their communities. So since the pandemic began, I'm talking just since 2020, we've dispersed about $800 million and helped 25,000 businesses with our coaching, over 36,000 businesses in funding. We serve all of Illinois and Indiana, and we're based in Chicago. And frankly, in my humble opinion, an overweighted amount of those dollars have gone to Illinois. And I'm taking it upon myself to get much more of our work focused on Indiana. And this is one of the reasons why I'm delighted that I'm able to partner with Emma John and the rest of the folks at CPI Friendly in Bloomington, the same way we're doing in Evansville and in South Bend and in Michigan City and in Gary and other places, where we recognize that there are entrepreneurs that A4CB doesn't directly reach because we're not physically present, and yet we want to serve, and therefore we need to partner with people like yourselves who know the entrepreneurs and know the area, and we can be there right behind you in order to provide these services. So let's talk about what those services are now, and again, I'll do this quickly and then we'll go to whatever questions you'd like. So the capital we provide is in the form of loans and grants. We provide a lot of money in grants in partnership with either governmental entities or philanthropic entities, banks, whoever wants to get free money to entrepreneurs, we're here to make sure it happens as a program administrator. But we'll spend most of our time here talking about our lending. And our loans are between $500 and $500,000. And we do so in a way that's a lot different than most lenders because we're not a heavily regulated financial institution in the way that classic banks and credit unions are. We can be more flexible, and I'll tell you how we go about using that flexibility. So let's start with the fact that we don't use credit scores at all. We don't put liens on cars and houses, at least up to $250,000. We look at how well the entrepreneur, the business owner, has managed their debts over the last 2 years and whether there's a plausible path based on the cash flow of the business to be able to repay us. That's how we do what we do. I'll talk more detail about that in just a second. We're quite happy to work with folks who have ITINs, or Social Security numbers, who need smaller loans that banks typically can provide, who don't have great credit, collateral, and such. And we try very hard to be fast. We totally recognize that our competition, in our view, is not the traditional bank branch. If you can get a loan from a bank, you should get it because you want that long-term relationship. It will help entrepreneurs get connected to banks so we think they'll be eligible. Our competition is the online lenders who are typically hedge fund backed, fintech driven, who will provide you with quick money, but they won't tell you how much it's going to cost in a really transparent way until you get down to the fine print. And then you're going to struggle to repay that typically. We've seen it over and over again. So we need to be fast and present wherever we can be online and offline for entrepreneurs. So they borrow from us instead of from those other options because we will provide mission-focused pricing in a way that retains the wealth with the entrepreneur rather than extracting the wealth and taking it elsewhere. So our APRs will range from 6% to 15%, just depending on what you're trying to do. We'll always talk about first what an entrepreneur is trying to do and what structure is best for them, which we'll talk about in more detail in just a second. And then we'll tell them up front, okay, given that, here's how much it's going to cost. Is that interesting to you? And if so, we'll proceed. Okay, first of all, I should say all of this is at a4cb.org/loans, where we list every single word of our credit policy, all the services we provide, so that any entrepreneur who wants to, if they feel like it, can figure out for themselves without even talking to us how much they'd be eligible for, and what structures are available, what price that would be, in order to be kind of as present and as transparent as we possibly can be with everybody they're seeking to serve. So when I highlight here briefly, specifically for Bloomington, the relationship we have built with CFI Friend Bloomington, and I'll note that CFI Friend Bloomington recently made a $50,000 investment in us, which we're going to repay at 2% interest. So we can take those dollars and plow those dollars into the entrepreneurs we want to lend to. So I view that as really important and interesting seed capital. But know that we're going to bring in money from elsewhere in order to serve absolutely everybody we can in the greater Bloomington area, using other funds as necessary in order to make sure that everybody who's available to us to serve, we can serve. So we're not limited by that $50,000, but it's a very, very good start to get us moving. Okay, so how do we do our lending? 3 types. Term loans is functionally kind of, you think about it like a mortgage, where it's you get all the money up front, repay on a fixed basis all the way through until it's fully amortized to the last payment. Lines of credit, which function more like a credit card. You can borrow, repay, borrow, repay, borrow, and repay. Or revenue-based financing, which is very different, in which you get all the money up front, but you pay back on a variable basis each month, depending on how much you earned the previous month. So in that case, for growth businesses, we're trying to match the dollars they need to repay to us with the speed at which they're generating the revenues. And if they have a bad month, pay us very little. If they have a great month, pay us more. And that way, we match it on cash flow basis with the needs of that entrepreneur. So I'll talk a minute about how it is we evaluate for these entrepreneurs, what is to be eligible for. So I mentioned before that we're looking at your credit over the last 2 years and your available cash. This is how, and I won't drain all of this detail because I'm going to share this presentation with you afterwards so you have all this detail, so there's no need to take like any specific notes. Again, all of this is A4CB/loans. But principally, we're looking at your credit report. You click a box, we go get that information for you electronically, bring it in, we're evaluate it in about 60 seconds time. And we're looking at the 3 things you see on the screen for the past 24 months, past 12 months, and today. What is it that we read off of your credit report? We then size the loan based on 150% of what you have already successfully proven that you can repay in the form of a monthly payment in the last 12 months. There's a cap to startup businesses. We're delighted to help people who have nothing more than an idea, but we're not going to lend as much to them because there's nothing to evaluate on track record there other than the entrepreneur's own credit history. So if that doesn't work, we will then switch to looking at financial statements. And this way, we ask for authority from the applicant, go pull their bank account information. There's sort of through a widget, secure widget, ID password. We will get all their data for them to keep it easy as possible. We do a quick calculation of global debt to income ratio using that information. And if that doesn't work either, then we move to what we call our step 3. These can be very small loans, but really for here, anybody who's got debts that are current and they've got more than $1 in the bank account, we're gonna make a small loan to them to help them to build their credit over time because they couldn't qualify in any other way for us and presumably anybody else. And in this case, we're gonna help folks who otherwise would be ineligible for capital at all and give them something to get moving to help to rebuild their credit and be able to give you that street pay. So that's everything about term loans and lines of credit for the smaller size of $25,000. And for term loans and lines of credit that are larger, it's exactly the same logic, except for it being an or, it's an and. So you take the credit policy side of it that I just mentioned, and the financial statement side of it from the combination of both your bank account information, we also collect tax returns to larger loans. Put it all together, we do the math for you and say, here's the amount for which you qualify for either term loan or line of credit. Okay, so that's what we think about credit policy. There's no kind of backroom committee where we then sort of evaluate all kinds of other things that are non-financial, non-factual. It just is what it is. And we do this in this way, so we strip out bias, we try to be fast and present for entrepreneurs and communicate really clearly what it is that's required in order to be able to borrow from us. So that's the story on term loans and lines of credit. To finish the overall story, I'll talk a little bit about revenue-based financing, which is different. That's different by design. So this is for the entrepreneurs who are really ready to grow, but who don't want to give up any of their upside in the form of taking venture capital or equity investments, where sure, you get that money, but you also give up some ownership. And so if you end up doing great later, you got to give a lot of that to those other people. And in our case, revenue-based financing doesn't require that. You get all the money up front, you repay it, you're done. Like all the money, all the upside, all the profit you generate is yours. So here's how it works. We are requiring that you are really sizable and we've got a track record here. So at least 2 years of history, at least $250,000 in revenue last year. We then work with you to find a growth plan that we use as a basis to create a sensible estimate for your projections of revenue growth over the next 5 years. We then calculate gross and net margins for you in order to figure out what can you plausibly repay here based on the last 12 months of your business and where you think you're going over the next 5 years. And then the way the repayments are structured is that the repayments will be somewhere between 5% and 7% of the previous month's revenue with a minimum and maximum that we would take in a month. And we had this maximum, by the way, so that if you had this huge month where you did like $1 million in revenue because all these crazy contracts came in, we want you to keep most of that. So we put an artificial cap on that rather than taking full, either 5% to 7% of that revenue. The APR for the whole loan is going to be somewhere between 6 and 12% typically, particularly with that cap in place on any given month. So you pay 1.25 the initial principal. Once you do that, you're done. You pay anytime you want. No prepayment penalty, anything like that. Obviously, that will change the calculated APR because of the fact that if you pay faster, that means that the APR will be higher because of the term, but we'll work with the entrepreneur to explain all that. And then at the end of the term, which is somewhere between 60 and 72 months, depending on what you organize with the entrepreneur, if there's anything left, that's okay. We'll then take what's left and just turn that into a normal old 3-year fully amortizing term loan. So they get way more time than even the original term in order to repay the balance. And the only time we take any collateral at all is for the loans that are above $250,000. We'll look for some security against that because those are really large loans for us, given that our average loan size is for CD like $15,000. So if we're making a loan that big, we need some security, but otherwise we don't care about that. Okay, so I want to wrap up by saying that the capital we provide is complemented by the coaching we provide. And so we have group coaching and individual coaching, but most importantly here, whenever an entrepreneur is looking for any assistance at all from us where they're trying to figure out what should I do next with a business, or how should I get my business started, or all the way at the other end of the spectrum. I've been running this business for 40 years. Now I'm trying to think through how can I monetize that asset? Can I retain that wealth for me and my family? All throughout that spectrum, we've got 4 full-time business coaches, really experienced, do nothing but have conversations with entrepreneurs all day, every day, helping them think through what they're trying to accomplish and what the next step should be. That is completely unrelated to whether or not an entrepreneur is interested in or eligible for a loan or a grant from us. We run this coaching regardless. I'm delighted to help anybody in the Bloomington area who's interested in it. We also do run group, kind of class-based, group programs, classical kind of monthly webinars and that kind of thing. For a particular subject matter, and we do cohort-based work as well, although that is largely focused on the kind of Chicago land area. And finally, a4cb.org contains all this stuff. So as usual, there's the usual kind of suite of ways in which people can stay in touch with us, but Emma's probably first port of call. Back to hop on any details, or you come directly to me.
Thank you, Brad.
I think I hit 5 minutes. So I'd be happy to help in whatever way I can if there's any questions.
Do any of you guys have questions for him?
So the partnership between our local CDFI friendly Bloomington, so is that focused specifically here in Bloomington, or is that in the region? If it's kind of in the Bloomington area, what are some of the other community, organizations that you might be connecting with? Of course, I'm thinking about the mill, our local incubator and startup for, startup businesses and so forth. Are you guys also marketing this and promoting that within our local community of entrepreneurs?
Yeah, I can start, and I'd love for you to add, please.
Yeah, go ahead.
We're really excited about this because, one, the dollars that we borrowed from CFI Friendly Bloomington, we're going to invest within Bloomington proper. But all of the rest of the entrepreneurs around the kind of the greater area, we're interested in serving, again, through dollars that we got otherwise. And the coaching is applicable to everybody. So you know the area far better than we do. And notwithstanding the fact that I find myself in Bloomington a lot personally because my son's a freshman. But kind of going back and forth, that's not the same thing as being present and working with entrepreneurs every day, hardly. So we're really excited about working through Emma, through yourselves, through everybody else who is local and much more knowledgeable to help us to get connected to all the different pieces of entrepreneurial support within the Bloomington area so that we can, first of all, make sure that people know we're here, and secondly, provide really good, timely, responsive service to any entrepreneur who expresses a willingness to work with us. So it's gonna be a mixture of the two, I think, where we do our part, but also work through yourselves who are more closer to it. Emma, what would you add to that?
Yeah, in terms of promoting it here, we're partnering with the ISBDC, the Indiana Small Business Development Center. So they know about this loan partnership and they've shared it on their social media. If there's anybody that's interested in financing, I know that they would share it with those people. I hadn't thought of the mill yet. I don't know why. So that's
That
something.
would be the go-to place.
Yeah,
That's,
definitely.
you want to find entrepreneurs
Yep.
in Bloomington, you should definitely go to the Dimension Mill and, you know, talk with those folks there. They're always, I know, looking for, you know, capital and so forth. So that could be
Yeah.
definitely a place
I'll just
to
stop in there after this meeting.
Yeah.
So that's someone that we could be advertising this to, and then we're putting it on all of our socials. It was already in the Bloomington Chamber newsletter and on their website. So we are trying to promote it here in our community. We could use help. Like if you guys know of any small business owners or someone that's wanting to start up a small business, feel free to point them in our direction. We'd be happy to talk to them.
Can I ask a question?
Yeah.
Brad, thanks for that presentation. And I know the answer, but this comes up from the public, and so I think it would be good to answer it on the record, and then the board can know it in case it comes up in other settings. But the interest rates are high right now, relatively high, but CDFIs tend to have higher interest rates, and so we're trying to obviously facilitate capital for businesses who need it and maybe haven't had great access to it. Can you talk about the 1.25x or the higher interest rates and how we get there, and just communicating about that a little?
It's a great question.
Thanks.
So, a couple things. First, we try to make sure that our rates are roughly half as expensive as the average credit card rate. And we pin it that way because credit cards are typically, although not exclusively, the only way that small business owners that we serve are able to access any capital involvement. Because they get inundated as a personal matter, not their business, personal credit cards come in, and that's what they use when they need liquidity that they don't have directly from the business. Again, to repeat, if somebody can get a traditional loan from a bank or a credit union, we want to encourage that because that establishes the long-term pathway towards having a long-term relationship, hopefully not just with a financial institution, but with an actual banker. And that's where you can go to get continual kind of service as your business continues to grow. But most of the people who we work with are not eligible and can't get anything at any price from a bank or a credit union, and therefore we're trying to make sure that we're pricing appropriately to help those folks. So roughly half of the average rate of credit cards where we try to pin our rates. And the second part of it is that we will, A4CB does not and will not charge the rate that would be necessary for A4CB to break even on our services. So we intentionally lose money on every loan. And the reason why we do that is because if we were to cover all of our costs, inclusive of the loan losses that we intend to potentially take, but we know we're going to take because we take so much more risk on entrepreneurs than any other financial institution would ever can even consider. If you include the loss rate plus the interest we pay on our debt, which is very low but not zero, you kind of add those before you even get into paying for staff or technology or any of that, like separate, we're already above what we charge. So then I gotta go off and raise all the philanthropy that's necessary in order to cover the difference. But that's my job, so that's fine, I'll do that. We gotta raise $5.5 million a year to cover the costs that we otherwise would charge in higher interest to the entrepreneurs we serve. And we're just not gonna do that, because that's not who we are. So that's why the range will be somewhere between 6% APR, not interest rate, APR, it's inclusive of all fees, everything. So we're between 6% and 15%. Our average APR will land right about 9%, between 9 and 10%. And that's very, very competitive with the way that you can borrow from banks right now, if you can get a loan at all. And again, most people can't. So that's how we think about pricing, which is hard to put on a postcard, but it kind of gives you a feel for the nuance that's involved here.
Thanks for sharing that. I really appreciate it.
Can I follow up on that? On your revenue-based loans, the 1.25x payback, was that over 6 years? Is that what I understand?
Yeah, so when we listen to what entrepreneurs trying to do and calculate with them what their plausible growth path is going to be, we will either do a 60-month, 66-month, or a 72-month term, depending on how much time we think they're going to need. So it's between 5 and 6 years. That's the length of the term. And we do that in a way that, again, tries to marry up what we think will be the average payments. It's always going to go up and down. That's the whole point of the product, but it's going to be averaged down over that, say, 5.5 or 6 year term. And if we hit it exactly right, then in like say for example, the 72nd month, they'll make their last payments. They'll never happen because it'll always be a little faster, a little slower because of people nature. But yes, that's how we think about it.
So yeah, but it's regardless of the timeline, when you hit that 1.25x, it's done. And if I'm right, that's a substantially lower equivalent APR, right? If 1.25x over 6 years is like 4%, right?
Yeah, I mean, it works out to about 6%. Because again, we're including in that not just the interest, which is what you're thinking about there, but also the origination fees and stuff.
So there are some fees up front on top of that? Okay.
That's right, yeah.
Got it.
So the all-in cost, APR, fees and everything. Most of those revenue-based financing loans, we're gonna do an estimated APR of about 6%, which is damn cheap money on a flexible basis like that.
Yeah, I had a quick question. I know that ISBDC does business valuation. They give those services. Do Allies for Community Business offer that in the coaching, or is that something that you would want a lender to have when they come to you guys?
Yeah, I'm of two minds here. One, we're always eager to provide our services. This is free. It's really high quality and so forth. But I do think that having a local present on-site business coach, mentor, however you phrase that, at the local business development center, there's a real value in that. So maybe the best way, in my view, to position A4CB's free coaching services is to be additive, to provide extra capacity to the coaching that's already present locally. And so we're always there and delighted to help, but we don't want to sort of insert ourselves in front of local people because rather people work locally when they can. We're always there. And yes, I think we think about the coaching we provide along a continuum of time and think about the entrepreneur journey. So the very first coaching activities that we typically work with entrepreneurs on when they have nothing other than an idea is let's talk about establishing the business. How do you do that? What's required? And so we talk about those basic building blocks of registration, insurance, the basics, getting into the bank account, and so forth. And then over time, we'll grow and have more sophisticated, complicated conversations about business planning, strategic planning, pricing, and the rest, depending on what industry you're in. So we're always eager to have those conversations in whatever timeline of the entrepreneur's journey that the entrepreneur needs. But I would like us to be supportive, I think, of others rather than sort of stand in front of the services locally, if possible.
Thank you.
Yeah.
Awesome. Does anybody else have any more questions about this?
I do. You spoke briefly about grants. What type of grants do you provide?
We provide grants based on the partner who's going to be providing the dollars and for whom we are serving as program administrator. So I'll give you a couple flavors of that we've done recently. One, we partner with the City of Chicago in order to provide grants in order to help entrepreneurs who have a physical storefront to be able to rehab that. And city didn't have any idea like how to manage pay applications and GCs and all that kind of stuff. So we did that on behalf of the city. They gave us the money, we took care of the rest. So that's just kind of one example. Another is that we recently worked with Etsy in order to help artistic businesses. And that had nothing to do with physical infrastructure. Instead, it was about an artist who had an idea that they wanted to be able to invest in and grow with a small amount of free capital that they would have no logical way to repay because it's so speculative in what they're trying to do with their art. And so Etsy worked through us in order to find entrepreneurs and serve them in a way that was really efficient, that got the dollars Etsy would like to give to artists but not any idea how to do. We helped them to sort of do both finding and the disbursements, and after that, free coaching or help those artists grow. So all sorts of different flavors aside from that, but I want to give you kind of an idea of the kind of program administration work we do with credit.
Great, thank you.
Any other questions?
I don't believe so.
Okay. I have two more announcements. So to go along with everything that Brad has been saying, we are hosting a webinar with Allies for Community Business for anyone that is interested in small businesses or anyone that just wants to learn more about what they do. And that's going to be March 5th at 11 a.m. It'll be a Zoom, so we'll have that information on our social medias. And then I also did want to say we recently announced 2 new lending partnerships, one being the one with Allies, and then the other is a $2.25 million line of credit with Old National Bank, German American, and First Financial that can be used for all of our focus areas. So outside of small businesses, affordable housing, and childcare.
It's great.
Yeah, and that's all over the region. That's not just Bloomington. So yeah, we're really excited for that partnership and this one as well. And Brad, thank you for sharing everything that you did. That was insightful even for me. So
Yes. Thank
Really
you,
appreciate
Brad.
your time. Thank you very much for it.
Yeah,
Appreciate
thank you
it.
so much.
Thank
We
you.
appreciate it.
Thanks.
thank you guys so much.
Great, thank you, Emma.
Thanks, Emma. Thanks, Brad.
All right, what's left, Dee? What do we have on
That was
the agenda?
one from last year. This is from this year. We have any general discussion or any general items that the board would like to present? Does anyone have anything?
Hey, I just have a little something. Is that okay?
Yeah,
Yeah.
absolutely.
Yep, okay. It's just about the vacant council seat. As always, usually it's easy for us to find a Democrat living in the zone, and then it's impossible to find a Republican or other political party person living in the zone. So right now, I just wanted to update you all. I'm doing an interview with someone who applied, and hopefully I can make a case to council that we can get this person recommended by my little interview committee and then approved before our next council meeting, which is next Wednesday, and then they would be able to then be at the March board meeting.
Great.
It's a little bit hard because council likes more more leeway time than what I'm gonna be able, or we're gonna be able to give with our interview of the people. So, but hopefully they'll understand that we have quorum issues and we can get that done.
Great.
Thanks for that work.
Does that mean the neighborhood, and thank you for that, the neighborhood resident spots, are those both council appointments?
Yes.
Okay.
Yes.
Thank you, Kate.
Awesome.
Okay.
Thank you
Appreciate
so
it.
much, Kate.
Yes, thank you.
Thank you.
All right. Anything? Anyone else?
So,
Go to the order?
oh, I do have a question about the loan forgiveness. Are we having, I know we've got six applicants. Are we having any movement on those that maybe had fallen delinquent on their previous
I
payments?
am still making efforts to contact them.
Okay, I didn't know if, whether it was just those that currently still had an outstanding balance or.
We have had a few that are delinquent. We also have some that have dissolved their businesses, and I'm
Sure.
just trying to get them to just go through the process so we can
Sure.
get it done officially and get the paperwork done appropriately.
Mhm.
So it's been difficult trying to contact them because some of their emails are now defunct,
Mhm.
and so it's a little bit of investigating and trying to figure that out. So you can't.
Sure.
I wish I could just call the Secretary of State and be like, hey, can you give me all of this person's information so I can find them somewhere? But that's just not how that works. So,
Sure. Okay.
yeah.
Thanks, Dee.
Yeah.
Appreciate that. It's nice to at least that we have 6 that have submitted information.
Yeah.
So hopefully through your continued contact communication efforts, we'll have more. I don't know, do we put a timeline on that at all, or is this just kind of a rolling? I don't really remember if we had like a goal in mind of like by
there's
summer we'd like to, or
so
something.
the loans are to be paid back by the end of June.
Okay.
So I really feel that by mid-second quarter, I don't think that by mid-second quarter I'm just gonna have to cut it off because we need to get everything processed and moving along, and
Okay.
so I'll still try to make attempts, but
Yeah.
yeah, I think that mid-second quarter is probably when I'll get full participation if there is any, and I will make that known to those that I am reaching out to. So,
Okay, great, thank you. All right. Anything else, anyone? All right, great. Hey, we're ending the meeting early.
Wow.
yeah,
Whee!
thank you so
Thanks,
much,
everyone.
everyone.